Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, August 6, 2016. So, just a quick note, this is going to be my last video report and most likely morning notes as well, at least until probably Wednesday. I'm going in for that knee replacement, so I'm going to be in at 5:30 in the morning tomorrow. They said to schedule it for 3 days being in the hospital. I'm hoping I can get out a little bit earlier than that, but I'm just going to leave it at 3 days. If I do get out earlier and I'm back at my computer with the charts and recording information studio to put stuff out, I will. But just to note, if you don't see it until Wednesday, that's the reason why. So let's get started. They looked like they were going to give it a try on Friday, the Bulls, and it shows us just kind of what uncertainty does and really kind of how weak the market is at this particular point. Now, I do believe that this all changes come Wednesday for the reason that I think a big part of the really to say the weakness and stuff is kind of pricing in a Trump victory for president. A lot of people are turning around saying it will be, the end of the world, this and that. It really won't. There's not really anything that he's going to do that is going to really turn things upside down. So it's very similar to the Brexit situation where everyone was saying if they left, it was going to be, complete chaos. It was complete chaos for 2 days, and then everything was back to normal. I think it's the same thing. I think it's just a scare tactic for some of the big money to try to push some weak hands out. And like I said, after the uncertainty is gone, then we're probably going to see a little bit more of a sustained rally. We may go down first and then up. I'm not 100% sure on the actual roadmap. But the thing is that from there, then things we'll start seeing some up and down action. But the one really important piece about Friday was, don't hold me to this. I'm not exact. I think it was the 9th down day in a row, and the S&P or the markets really have not seen that in over 30 years. So it is a little telling. But the thing is, it's something that has dropped. We haven't seen in 30 years. But yet it still looks like consolidation, again, is leaving, I think you just really have to kind of keep an open mind for both directions because, my initial kind of reasoning for looking down was for at least a test of the 200-day moving average. We did that. Now we did see a little bit of a bump on Friday, but then it sold off again. So if the Bulls lose this, then most likely we're going to get a quick drop down to this 2048, possibly even down to the 2035 to close this gap. But once it's done, then I'm expecting we're going to get a counter trend rally, and it may come back up to the 50-day moving average, which is 2147. It could even go in a little bit higher than that, but I do expect to see some type of counter trend rally. Now, again, I'm not sure where it starts from. And what we do know is that this pattern is really bearish, and it's looking for a move to come someplace down into this area. So if we do get a counter trend bounce, say after the elections are over, then what happens is I'm still going to be looking lower, and I do believe that we're probably coming back down here before everything is said and done. So, right now, I think cash is a really good position because we could start that counter trend rally Monday. Maybe it goes down further. So buying right here is a little bit risky. So sitting and letting the dust settle is probably your best bet. And, right now, it really could go either way, and that's not really a trading environment I want to step in. I want to get in when we have some good bearish divergences where we're not going higher and we have sentiment at extremes and we're looking for a turn down. That's when you jump on it and you take the 60, 70 points that are really quick and then back out and do the same thing again. We're not in that situation, so that's why unless you're being quick, just watching right now is good. And if we drop down, I'd probably be more on the side of buying the dips than shorting it if it goes down lower. On a 60-minute chart, here you can see that we we kind of made this little double bottom, and a lot of times we've seen rallies actually trigger off of that, where we came down, tested the lows. So we're here again right now. Now, what may happen is we may get a pop up and then another push down here, very similar to this right here. And that would be Monday. We could get a pop Tuesday down, and then Wednesday pop after the elections. So that's just one scenario. I don't know if that's the way it's going to play out. But if we do head a little bit lower, we're going to get bullish divergences on the 60 minutes, and you can see where momentum is pretty oversold right here. So it's not something that I really want to be shorting down here, and I'd probably be looking, I'd be more on the side of buying weakness, that, anywhere from the 2074, like I said, down to that 2048 or 2036. So you just layer in and anticipate that we're going to get a decent bounce off of that. And like I said, I'm not looking for new highs after this. I'm looking for a test of these resistance levels, but that still is a decent trade, especially for coming from this level here. So taking a look at the 15-minute chart, we do have some bullish divergences. We had a bounce off of it, and we came back down. So if it's going to go lower, again, keep an eye on this 2075. You can see once we got a little bit above the 50% line, that was all the bulls had, and then that's when we had a quick move to the downside. So I would say, really what the bulls have to do is clear this 2100 level. That's what I put in the morning notes. If we get that, then we're going to get a reaction trade up to the 2120. If they can get through that, that's when we anticipate that they're coming up someplace up into this 2138 level. So those are really the trigger marks for the long side. And if you're looking to buy weakness, I would keep an eye on this 2075 all the way down to that 2048 level. On a 5-minute chart, there's really nothing. This move right here was pretty strong. So we don't have any bullish divergences even on the 5-minute chart. So that means we may get a pop up and then down again, and then that will set up some bullish divergences on the 5s. And we already know we have them on the 15s, and if something like that happens, we're probably going to get them on the 60s. So again, that's not an environment to be jumping on the short side. It's more, okay, having your open mind and looking for where a low could take place, but with the uncertainty of the elections coming, like I said, it may be best to just sit and wait and see what plays out, and kind of jump on a quick trade after the elections. And if we get a decent bounce, then in a couple weeks we're probably going to be looking to short for a much larger move to the downside. So with that, good luck with your trading for the next few days. I will, like I said, I'm hoping to be back sooner rather than later. But at the late end, they said I'll be out on Wednesday. On a short end, hopefully I'm back on Tuesday. But with that, enjoy the rest of your weekend, and I will talk to you guys when I get back from the hospital.